It's March 2021, and US regulators have made mistakes which have culminated in the collapse of some of the nation's most influential banks, including Silvergate Capital, Silicon Valley Bank, Signature Bank, and First Republic Bank. The banking crisis has also spread to Switzerland, where Credit Suisse had to be rescued by UBS. In short, the US banking system has been shaken to its core. Meanwhile, Europe is carefully assessing what the US banking crisis means for its banking sector, and the answer from its leading figures is clear. Regulators in the US should learn from the regulation practices implemented in the European Union since 2008. This includes the Basel III rule, which has been in place since then and applies to most EU banks, but not most American ones. As Andrea Enria, chair of the European Central Bank's Supervisory Board, put it, you need stronger regulation. In that sense, the US lacks some controls. These regulations, according to Paul Tang, a lawmaker and a member of the European Parliament's Economic Committee, have indeed been designed to prevent such a banking crisis. It's not just the measures that the EU is paying attention to either. Its officials are also very aware of the threats associated with high interest rates, something that the European Banking Union was created to make the banks more robust against. It's a delicate balancing act for EU officials, trying to both provide the banks with the necessary tools to protect themselves against such a crisis, while also monitoring the rulebook so that it remains kick-in-the-pants regulations. As Stephanie Jan Corden, a member of the European Parliament, noted, we have to be careful and ensure these rules are still fit for purpose. But EU lawmakers are also adamant that they should not be complacent. This banking crisis has been a long time in the making, and it's the responsibility of the banks, and their regulators, to do whatever they can to make sure history doesn't repeat itself. As Enria put it, we have to remain vigilant.